Is anybody?
I can.
Hello.
There.
There we are.
Okay.
Did you get the introduction?
I tried. I tried. Everybody was frozen. I couldn't tell if anybody was there. Hello, everyone. Let's try this again. Um, Welcome to the Victoria Real Estate Show. It's our weekly market update. It is January 23rd, 2025. And today we have with us
Jen Lowe,
Jane
Mortgage
John.
Mortgage, DLC Modern Mortgage Group, and
Jane Johnston with Briar Hill Group at Remax Camosa. And welcome, everybody.
Thanks. And I'm Andrew Plank with Royal LePage, and I'm with the Vibe Collective.
He be vibing. Okay, so
we all vibing.
how are you doing? How's your week going?
Mine's been great. Busy. Lots going on. I'm really excited about this coming spring.
me too. I have gotten crazy busy.
Yes, I've given Jen lots of leads this week. I'm like, here you go, here you go, here you go, here you go.
No complaints.
Yeah, sometimes you feel like the sprinkler system where you're just like, let's get this out here.
Yes.
Yes.
Things are coming at you, and you got to kind of like, okay, this goes over here, this goes over here. How do I connect this up? And yeah, when the phone is ringing and you need to connect people, you just jump into it. Good for you guys.
You got it.
So, interesting story. I had some clients who purchased property, and they, I told them last year, wait till the end of the fall market. And they got a great deal. They took possession of their place yesterday. So they were so super happy. It's not the biggest house in the world. They've got a little bit of an ocean view. And this is like, their perfect home. This is what makes real estate so amazing. Don't you think?
When you can put someone into a home and they just go like, this is like, they're ecstatic and this is it. And it's what they've been looking for. That's just super satisfying. I had that recently too. You're right there, Jane. I had that recently too with some clients. They're good friends as well, but we were looking for homes for a while, and I kept saying, just wait, the right one will come up. Just wait, because they were like, well, this one could work. I'm like, you know what? You can do better. We'll find you something. And then when we went through this one, we were looking, we looked at like 4 properties that day, and then they mentioned this 5th property. Said, well, there's this one that's kind of caught our eye, but we're not sure. Maybe a little higher price point, and this and that. I looked it up. It was vacant, and I said, we're in the car. It looks like it's easy to show. Let's just go. We went in, and they just, they were silent as they walked through, just going, huh. And I was like, okay,
this is it.
Yeah.
That's so nice.
That's great. Yeah. And they're so happy.
It's the one of the very first buyers I ever took around. I showed him the place. I may have told this story before. I showed him the place that he wanted, he described, and I made the mistake of showing it to him first. And I remember him standing in the living room going, could it be this easy? Oh my God. And then we went and looked at 12 other properties. This is in 2006. And he's like, oh, and then he got distracted. He's like, I think I'm going to wait. Yeah. And I'm like, well, that first place I thought worked well for you. If I'd shown him in opposite order, he would have
maybe
gone for it. So he didn't go for it.
Have a story.
Well, 3 months later, we found the same house down the street, but it took us 3 months of looking and probably like 50 homes. So
that is a process some people have to go through, right? And I may have told this story too, but when I ran the camera shop and I was selling photographic equipment, somebody would come in, they want to learn photography, they want to be, they're looking for a camera. And I had an inventory of, let's say, 20 different used cameras to show them. And they would say, I'm looking for a camera. And I would start pulling out cameras and talking about this camera and that camera and all the differences. And they'd look at me and thank me and walk out the door. And so I learned after a little while, like, they come into the shop, I ask them more specific questions. What are you trying to do? What do you want to do? What kind of photography do you want to do? What's your budget? And get really, really dialed down. And then once I really can dial down. I could pull out 3 cameras and say, based on what you told me, I'd say it's one of these 3 cameras. This is a little bit about each of them. I think this is a good one for you. And often they would just go with that.
Yeah.
And that's what we need to do in real estate as well.
100%.
I think Chris does that in his dive shop too. Just figures out, the technicality of the diving person and then plugs them into the right suit.
Why waste everybody's time,
It's similar when you're shopping or like even looking to go on a vacation and you go on Expedia or whatever, and there's so many different hotels, and I go, forget it. Like I don't know. Yes, it gets overwhelming, right?
Paralysis by analysis.
Yes, there we go.
Yeah. Okay.
All right. Well, let's analyze.
Let's do that.
Okay, we're on the weekly market update for January 23rd. Just remember, if you like our show, please hit the like button right now. Don't forget to subscribe to us on our different channels. Comment if you have any questions. We do post them here and share, of course, to friends who might be buying or selling. We'd love to help them. All right, here's what's going on the last 7 days, Andrew. Or actually, it's 14 days.
Okay, so we're 14 days for this one. So in the last 7 days, though, on the right-hand column, right-hand channel there, we had 300 properties go listed live. And of those, not of those 300, but of the full inventory of listings, 103 properties came out of the market, went pending. 58 properties were price decreased, 2 properties price increased, 2 properties came back on market. 97 transactions at the lawyer's office and land title, and 40 properties expired unsold while 8 were withdrawn. Go back 2 weeks to see what was happening early January, and those numbers are much less. But of course, this is just in the doldrums right after Christmas, after New Year's. So people weren't really just jumping at the bit to get going. There were only 100 new listings, 55 properties went pending, 23 properties decreased in price. So we see a lot more listings if we look at the January 23rd stuff here. It's like a third, maybe even almost a quarter of the ratio of the new listings to pendings is, Jane's going to do the calculation, but it's definitely a third, 300 to 100. Yeah. So 1/3 of properties is the ratio, and that's interesting to see. I think we're seeing a spike in new listings, not a drop in pendings.
It'd be interesting to see on list to sale is what the list to sale prices were. So to actually do an analysis, okay, well, when you have a 55% list to sale ratio, what is the price?
Actually, I can do that right now. Hang on. I'm going to share a screen. I think, hang on. Because I actually had this up. I was just looking at this. So if we look over here at price sold column.
Yes.
This column here, price sold. I know we were just talking about size of screen. I'm going to move this over.
I can see it.
Okay. So we've got the price sold, the price original, and the percentage of. I'm going to go down here. And so we can see that of the recently, this is the last 5 days, sold properties, one went for 94% of asking, one 97% of asking, one went for 84% of asking. Wow, but that was just a lot. So that's not a single family home. You can see a range here running between 86, but a lot right close to 100, and a few at actually over asking price. So we're actually hitting a range of pretty close to asking price, some well off asking price, but this one was 201 days on market. So come on, of course it had to go lower. So I'm seeing some actual, over asking listings. So we're seeing multiple offers in this marketplace already. 101, 104, 105.
But if you look at the list on the multiple offers, if you can organize by percentage, Andrew, on the top there.
Yeah.
And then you can see, go the other way. Like they're not selling a lot over asking. This is not like COVID. So people
Well,
are
so
still
105, yeah, 5% over asking. So, and this is actually based on the original price, not the current asking price. I might run my um, my evaluation here on the original listing ask price versus the price sold, not the actual current price. There's a chance somebody listed it and then dropped their price a couple times. I want to know
Mhm.
how did they do versus what they were originally asking.
That's interesting because I do it the other way because I'm interested to know what brings in the offer.
Well, I mean, I can move this over
I love stats.
and we can
Stats are
look at it that
incredible.
way. And so
Mhm.
versus the actual asking price, the last asking price versus the price sold, now we've got a bit of a different run, but quite a few that were above asking, a number at asking, quite a bit, just like within 1% of asking, 2% of asking, 3% of asking. There's only a few really that were less than that. And when we look at the days on market, it's pretty clear these people were well overpriced to begin with. 80 days on market, 98 days on market, 91 days on market, 201 and 166.
Yeah, we have a graph that shows if you put your place on the market too high, you're going to end up selling low. For this reason, is your house gets stigmatized. Yeah.
Yeah, well, I mean, the pool of buyers out there are aware of what things are worth, and if your property is always overpriced for all the other options, it's just going to sit, and there's no two ways about it. So, okay, moving on.
Moving on. Okay, so for January 20th, we have for the past week month-end statistics, sorry, 188 sales so far. It feels like it's picked up this past week, and that's compared to 341 for the whole month of January last year. So I don't know if we're gonna get to that 341 or not. Be interesting to see.
I totally think we will.
Okay.
Yeah.
New listings were at 663, and that's compared to 960 last year for the month of January. And we're at a total inventory of 2292, still low, but above where we were last year at 2,140. And yeah, so last December, we had 431 new listings and 421 net unconditional sales. It was a fast month, I felt. December, for me anyway.
It went fast.
It went fast. Yeah.
Okay.
Alrighty. Right. Jen, what's going on? What's the plan? What's happening next week with the Bank of Canada?
We'll see. I mean, what we're hearing is that we're still looking at a 0.25% drop to the overnight lending rate, which is good news for us variable rate holders. Yes, yay. We are seeing a lot of uncertainty because of this threat of the tariffs. That is inflationary, which could push interest rates up, and we don't want that. It depends on how Canada chooses to respond to this threat of tariffs.
So, so if the tariffs come into place, there's a chance the Bank of Canada will go back to raising rates. Is that what you're saying?
Yeah.
Okay.
Yeah.
And would they be doing that pretty aggressively? It remains to be seen. You know, what's the historical? I mean, this is probably unprecedented, but
yeah, I don't know. It's just a concern. It just raises that uncertainty. So we just need to see how Canada chooses to respond. And then we'll see the effect on the economy and the markets.
So what would you recommend now? So go variable short term?
Variable. I'm all about variable. I mean, the fixed rate, so it gets, it is very complex in that the fixed rates are tied to the bond yields and the bond yields are quite closely tied to the US Treasury. And with that, we are seeing fixed rates going up a little bit, and that's just due to this uncertainty. So that's definitely, I mean, I'm more focused on a variable rate, but it's definitely an individual decision because you have to be comfortable with risk. There's also two different types of variable rates. So we've got a static payment variable, and then we have a where the other variable rate is where your payment changes, but the lifetime of your mortgage is affected.
Yeah,
so the
that's the more common one.
It is, yes. Yeah. But it's important to know when we're exploring lenders what your preference is. Do you want to take advantage of when rates drop, your payment's going to go down? Or do you want to pay off your mortgage quicker?
Right. And then there's that whole idea of if the rates change and interest rates go up, your actual payment remains the same, but your amortization
goes longer.
Out. Yeah.
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 Yeah. So what she's saying is you're paying this amount of money, and but because your interest rate is fluctuating, you're paying more principal or less. And if you're paying more principal, you're going to pay your mortgage off more quickly, and otherwise you're going to be hooped.
Mm-hmm.
Yeah. I think a lot of people would go for equal payment if they could, like just because it's easier to plan, but then, oh my God. Yeah. Could go either way.
Were there many people, there was a worry at one point where people who were on variable rates on that fixed payment plan, where interest rates were going up, and there is a trigger point where if interest rates go up high enough, suddenly they have to reset that because otherwise it just doesn't no longer works financially. Like you're now going underwater.
They're not paying enough interest. When it gets to the point that they're not even covering the interest portion, their payment has to go up, and they get, unfortunately, a not so lovely letter from the bank or lender telling them, "Here's your new payment."
And how often does that happen? When did that happen? Did it happen to many people that you were working with? Well, can you tell me?
So I mean, I've been a mortgage broker now for 13 years. Prior to that, I was in the banking world since 1996. So up until after COVID, I'd never even heard the term. It's called your trigger rate, and never even heard that term. And then it came out when all of a sudden the Bank of Canada was raising rates, and it went up so fast because inflation was so high.
So that would be somewhere in the fine print of a mortgage document when you get the mortgage document that probably maybe 2% of people fully read, or even if there's a higher percentage of who's reading the entire document, you're thinking that'll never apply to me, so you forget it right after you've read it, and then sometimes it comes into play. Yeah.
It was a definite. I mean, as far as back to your question, the amount of clients that I had that were dealing with that, I was communicating with all my variable rate clients on a regular basis. Here's what's happening. Do you want to adjust your payment to get you back on track, or refinance? To explore and make sure. But I had very few clients that were affected by that. Because at that point in time, when interest rates were going up a lot, people were going with a fixed rate, and the market honestly was quite quiet too.
Right. Okay. Thank you.
This makes me wonder, because we're about to renew. So I'm like, fixed or variable? Yeah. And of course, when I feel when the banks feel like variable might be a better choice, they decrease the fixed rate. And when they think that it's going to be a worse choice, they increase the fixed rate.
They also, when interest rates are going down on the variable rate side, they decrease the spread. So
Okay.
you get, your rate could be prime minus 0.9 or it could be prime minus 0.2. So what we see when interest rates are coming down, and just in the last week and a bit here too, we're getting notifications that lenders are decreasing that spread that you can't offer prime. So that tells me that variable rates are going to continue to drop.
Interesting. Okay. Because they're trying to disincentivize people to go for variable because they'd rather get you in a fixed because they're assuming they're going to get more interest from someone going fixed because they've done their projections and said, we think interest rates are going to continue to drop.
Yeah.
So we don't want, we want to actually get that higher fixed rate. We don't think interest rates or variable rates are going to be going up, and therefore we prefer people to go variable over fixed. So you can kind of game the system by knowing that the bank is trying to game the system.
Yeah.
The banks know more than we do. Yes.
Yeah.
Right.
Okay.
And they're in it to make money. And unfortunately, yeah. So.
Okay. And I'll just say again, I know that sometimes this decision is not a financial decision around fixed versus variable. It's a sanity and comfort decision for someone who does not like risk. And so they're willing to pay and know that maybe the probability of them paying a higher interest rate over the term of their mortgage is going to be high. They're going to be paying a higher price than they would if they'd gone variable. It's very likely that they will, but they just can't live with the risk that, but what if interest rates spike and then I can't afford to make my payment? And they know they can make that fixed rate payment. So they're like, the comfort is enough for me that I'm going to pay that additional cost. I call it an insurance cost.
Yeah, I have a client who during COVID, I think she was with Jen. So I think interest rates were like 1.5% or something. And she's like, I got a 10-year rate for 3.5%. And I was like, really? That's a lot. And then I was thinking, it's actually quite smart because as soon as the restrictions started to come off, that's when things started to change. So immediately that's when
that was a great plan that she did. And she paid more interest than she needed to for the first, I don't know, 3 years?
6 months.
6 months?
Because then rates went up, like quite a bit very quickly. Yeah. So she made a very good decision.
Yeah. And they're planners, so they like having it all exact.
Yeah.
Yeah.
And you can budget and plan your money and go about and spend it on other things. So, okay. If anything else we want to talk about in terms of mortgages or upcoming events or news there, Jen?
The key thing is that these tariffs are not good news for our economy. So we want to hopefully Canada responds in a positive way where we can reduce the effect of these potential tariffs. So it doesn't affect our rates.
Yeah, I honestly, and we sometimes get a little political here, but I just feel like what's going on down in the States is going to have, the administration has their eyes on a lot of different things, closing the border in the States, renaming the Gulf of Mexico to Gulf of America, the war in Ukraine. Their attention's on a lot of things, and I think they're trying to do a lot all at once. And at some point, they may have to pick their battles. So we'll see. But my feeling is that they might realize pretty quickly that they've just sort of opened up a lot of cans of worms all at once, and we'll have to deal with some repercussions they hadn't anticipated.
That's the thing, it's that all it takes is for Trump to say one thing publicly that's tweeted or on social media. It can have a significant effect on the markets, which then affects our interest rates.
Right. Yeah. I think at some point we all have to just sort of stop reacting and just realize this too shall pass, hopefully, and move on.
Yeah. There we go.
Okay. Yeah, Jane hasn't said a word on that because she's wise.
Oh yeah. I mean, you could obsess honestly about all of this and worry. And I think I have maybe like generational PTSD because my parents were British and lived during Second World War. And some of the images recently have brought to mind comments that my mom made as a young child.
Mm-hmm.
Oh, wow.
Yeah.
Yeah.
Yeah, no, there's, anyway. So tune in on our Victoria Real Estate Political Show next week. Let's move this on.
I probably won't be going to the US in February anymore. Let's just say that. I'm not going to be spending any money. I'm going to say it here. I'm not going to spend any money on US products. Definitely over the next 4 years in like training or anything that I don't have to. So
Right.
I'm going to be looking to buy Canadian if I can.
Right. Freedom fries. Sorry.
Interestingly enough, Dominion Lending, we just had a big State of the Union address yesterday, which is always really exciting for the upcoming year. And our annual conference is in Whistler this year. And quite often it's down in the States. This year we're staying in Canada.
Yeah. Good. Yeah, absolutely.
Well,
now, I guess we're about to wrap this up. I do want to just, great mug there. You want to keep calm and carry on. Very British of you. So tariffs, I just want to circle back really briefly on tariffs, maybe not so briefly, but there is talk about, what this could do for the housing market in general, not just talking about interest rates,
building,
but the economy, building, like everything. And is there, what's the chances we're going to see? And Jen, this isn't a question for you. This is rhetorical. Maybe somebody who's watching can throw something in the chat. What are we going to see necessarily with our housing market, where if we start to see people distracted or having to tighten their belts, are we going to see more people selling? Are we going to see less people buying? And this is just this remains to be seen kind of question, I think. Jane.
Well, I mean, I'm already working with people who are looking to repatriate, and I'm also looking Canadians who possibly want to sell in the US and move back to Canada.
Yeah. Same.
Yeah, so I think on a positive front, that's a good thing for us. I don't know if that's happening elsewhere in Canada. I was watching the CBC yesterday, and they were talking about Arlene Dickinson and Jean Charest were talking about focusing on doing what's best for Canada rather than reacting, trying to plan. And
that's good.
I don't think, and that's the thing, like people are all reacting in advance of some words that somebody has said in the South without really having anything yet put in front of us. And oftentimes we've seen that those words turn into other things, or somebody gets distracted by another shiny object. So let's wait and see, and not worry about it.
Well, it's funny because yesterday I wrote in a chat, and I thought it was just chatting with one person, but I realized after I wrote it in a big chat, I was like, yeah, I'm rethinking about going to the US. And this guy who I know is very right wing is like, why would you be thinking about doing that? And I'm like, I think you need some sensitivity training. Like, if you go look at the Trump Instagram and Twitter, he has pictures of North America with the American flag all over. Yeah. And I'm like, as a I guess it just surprises me.
Yeah. We're going to have to do new licensing if we become United States realtors. Like, I don't even know how that
We're not, dude, just don't even talk like that. I'm not entertaining it.
Well, anyway.
You know what?
There's a
You know
lot of
how
YouTube,
messed
like-
up their system is. It's like, you know, if you sell in the U.S., your buyer can just withdraw. In some parts of the U.S., they can just withdraw their purchase, or maybe they'll say their financing isn't going to come together in time, and
Yes,
everything
the escrow
just
system
falls
goes
apart.
a lot longer. Yeah, yeah.
We have a
There's a lot
great
more.
system.
We do. We do. It works
Mhm.
really well for all sides. But
Yeah.
that's okay. Well, you know, our show's not over yet. We're not just sitting around here chatting. We still have an audience.
All right. Well, if you guys
Just
have any
saying.
comments, we're here. I think we should end the show while we're still ahead. Okay. We are on every Thursday at 9:30. Let's see what's happening with the world next Thursday. Join us
Oh,
at 9:30.
oh, we got a quick question. Oh,
Do buyers want to see a price reduction on a listing before they
Wait.
even consider looking at it?
do
Want.
you want to take that and I'll follow? No, wait, not want. Wait.
Oh, do buyers
Buyers wait.
Yeah.
Yeah.
No, they do not. I know Kevin very well. No, they don't, Kevin. It depends on the list price. So when we're looking at what I call the pricing pyramid and where the market value is, if you price it within that market value where there's a lot of activity, you're going to get people looking right away. But if you're pricing it above, they just simply won't be looking. And in the case of, you know, some listings right now, there's a lot of activity. And as Andrew said, there's multiple offers. That means people are looking before they.
Kev, yeah. I always like to turn this to a different like product analogy. So if you're looking on, let's say, Facebook Marketplace for a used TV, and you're watching the listings of people advertising for used TV, you might see one. Let's say the TV retails new for $1,000, and you see a bunch of people asking $800 for used TVs, and you might say that's too much for me. I'm going to wait to see if those come down a bit in price. But then somebody else lists one for $300. You're not going to wait for that to be reduced. You're going to call that person right away and say, I want to see that TV, and very likely buy it if it's in good shape. Same thing for listings on the marketplace for real estate. Some homes are just overpriced, and you already know that. Some are really reasonably priced, and they're going to sell. And you're not going to be waiting for a reduction on those. You're going to go look at them and make a decision. Every once in a while, you're going to see one that's just a no-brainer. So that question is hard to answer. Like, there's no one answer. It depends on the property. There you go. Thanks, Kevin.
Yeah.
Yeah.
And also,
yeah.
so there are houses at the high end that where like on Bear Mountain that people, so even to get in the listing to see it, the agent is pre-screening people right now. And so it's hard. At the higher end, you're going to be longer days on market regardless right now.
There's that. Yeah.
Yeah. And you're going to have less showings. Okay. So you can buy the Dodge Caravan of houses, which is like 900 to 1.1 million. And for sure, you're going to get a lot of people viewing, and you're going to have a wide spectrum.
Everybody's looking for a Dodge Caravan.
Because everyone's looking for a Dodge Caravan, or you can go for like the premium car, and less people are going to be looking, and they're going to take their time and be more discerning. Right?
Sure.
Yes.
I mean, yeah.
Jen Lowe had a house like that. Very similar. Okay.
I like a Dodge Caravan.
Like it. Stop.
Like electric cars.
I call it the bread and butter. Like, you know, those listings that are the bread and butter that you don't, that are like, they appeal to a lot of people. We're talking Royal Bay. We're talking West Hills. And they are, you know, they don't have a big lot. They don't have a view. They don't have anything.
They're designed to appeal to the masses.
Yes.
And they're custom.
We call them a cookie cutter
plan, their quality. Yeah, cookie cutter homes. Happy Valley, they were built like because they're all similar, they're cheap to build, the land was cheap, they're appealing to a lower price point, and so they come and go really quick. A more
Yeah.
premium home is waiting for a buyer who is maybe more discerning, but also has more money and is going to recognize the value of that. And that can take longer sometimes to find because
And
some people don't recognize that value.
And also sometimes you just need to, like, if you think a house is if you're looking at a property and you think it's overpriced, then yes, people just wait. That's what they do. And that's how you know they're waiting for you to make a decision as a seller. They're waiting, the seller's waiting for the buyer to come to market.
Actually, what is interesting about that though is that does sometimes build up a pool of interested buyers who are saying, that's on my list of interested ones, but it's way too high a price. And so you've got a number of buyers who maybe are like, they're thinking about it, it's in the back of their minds, it's on their list, but it's like, I'm not going to go look at that yet. And those buyers will then buy something else, and that pool of buyers is always moving, but there's always a few people maybe thinking that's on my list of possibilities, but I'm not ready for that yet. Once in a while, one of those buyers in that pool will go forward and make a low offer and get ahead of a price reduction. And the seller who's been sitting there on market for quite some time without offers might say, yeah, you know what, I was just thinking of doing a price reduction and I'm really motivated and let's work together. And then on the other hand, if the seller does bring their price down to something that triggers that pool of people who've been looking to jump into the pool, then you might actually end up with multiple offers, which is funny, but does happen.
Yeah, so it actually just happened on our listing on Cordova Bay for a commercial property that we didn't have a lot of activity before Christmas. And then since Christmas, it's just been like very consistent. And same with what you were saying, nobody was sort of taking the plunge. But when you open up the gate and you go, okay, we have one offer, you can get like 2 or 3 coming through. And that's the benefit of having a good listing agent, is that they're in touch with those agents and keeping everybody apprised as things happen. All right. Great wisdom there, Andrew. Okay.
Dropping pearls.
Andrew, how do people keep in touch with you?
Yeah, reach out. I'm at, phone or text me. Let's have a chat. I'm at 250-360-6106. That's 250-360-6106. Email is info@andrewplank.com. And check out the website, andrewplank.com or realvibe.ca.
Awesome. And Jen?
I am at 250-217-4925. I'm with Dominion Lending Modern Mortgage Group. Email is jen@jenlow.ca, and my website is jenlow.ca.
All right, and I'm Jane Johnston. My number is 250-744-0775. You can reach me at briarhillgroup@gmail.com. And my website's briarhillgroup.com. You can look at these shows and more at victoriarealestateshow.com. And please follow me on Instagram at realtyteacher_remax_Victoria, or our group at Briar Hill Group. All righty. Great seeing you guys. Thanks everybody for showing up, and we love the questions. So thanks. Don't forget to post them. If you have any comments, contact Andrew, myself, or Jen, and we'll be happy to respond. Take care, everybody. Have a great week.
Bye-bye.
Thanks.
Bye.